for manufacturers, IC disc is a great incentive that's out there. The tax savings are not what they used to be under the kind of the old law prior to 2017 when tax rates were higher, but there's still benefit for manufacturers. Basically, if you're exporting manufactured goods, or even if your goods are ultimately exported, even if you're selling them to be exported, you still can qualify. So I just think that IC disc, when we talk about efficiency, I think about tax efficiency, and that IC disc is a great strategy that all manufacturers should be looking at if their manufactured goods are making their way overseas.
Not to get in the weeds on the complexities of an IC disc, but if I remember right, that is a commission paid that is a deduction for the company. Is that how that works?
The way the IC disc works, just in a nutshell, and then I'll get off my soapbox here, is basically you're able to generate a deduction, approximately 6% right now. So you're able to generate a 6% deduction, and then the ultimate owners of the business or whoever owns the IC disc are able to capture those tax savings.
At what point of exports do you typically see it being beneficial or see clients looking to consider an IC disc from an export? Is there a common percentage that's used?
So you're going to want to see a few million in international sales for that benefit to be worth it,
right,
and to put the IC disc in place. But there are several ways to calculate the disc commission, which is ultimately what's driving that deduction. And even if you have a smaller amount of international sales, but you're highly profitable, well, under one of the ways to calculate the commission, that can drive a higher commission expense. So you really have to look at it, but typically you're going to see a minimum of a few million to make it worth it.
For manufacturers, is there a common structure that's corporate structure that's most beneficial for IC disc? Do you have to be a C Corp, S Corp partnership in order to utilize this benefit?
You're going to see a lot of different flavors when you look at choice of entity. So the type of structure that the business is in. So C Corp, partnership, S Corporation. But I think the takeaway is a lot of different structures will work just depending on the ultimate owners, their needs, their personal tax planning. But the tax code is there to encourage domestic manufacturing. And so I think keeping your eye on the ball with manufacturing and all of the tax incentives that are available, I mean, that is definitely one area that you can be efficient, tax efficient, and it pays dividends.
It seems like a attractive wealth generation tool as well for individual business owners outside of the business.
Yep. Chip just likes to take it straight to. I like it. That's my audit tax guy right there.